Hey guys, Britt here. Welcome to End Times Bible Prophecy. Make sure to hit the subscribe, like, share, and restack buttons. Well, the crisis is near. These events, I believe, indicate that. So what crisis am I talking about? Well, I'm talking specifically about a banking crisis as a subset of the financial crisis I believe we've been in for a couple of months now. Even though the mainstream media may not formally acknowledge that yet, I believe that's coming in due time. So we're going to look at where we stand right now, what three things are happening that I think indicate the nearness of this crisis. And then we're going to talk about, well, what does this have to do with Bible prophecy? Why are we talking about it? So let's take a look at this right here. Been watching this channel for a while, you know this is called the yield curve, the US 2-year, 10-year spread. For almost 2 years now, we've talked about watch this. It was inverted and inverted first in July 2022, meaning that number right there went negative. And we said for close to 2 years, when this goes positive and stays there for few days, few weeks, really, then we know that we're really days to months away from the crisis that emerges into the headlines. Well, this number went positive. It closed positive for the first time since July 2022 on September 6th. So that was 3 weeks ago today. It was down a bit yesterday, so you can see here, but it's still positive, and that's the signal that we're really looking for that's telling us, look out for what's coming, because historically this indicates an economic downturn, recession to severe recession. It's got a perfect track record going back over 50 years, which is the modern era of the fiat currency system, post Richard Nixon closing the gold window back in 1971. So this had a perfect track record ever since. So we have no reason to expect that it's different this time. And we're seeing indications that point to a crisis coming near. So let's take a look at the first of those. So this is from Zero Hedge from Wednesday. It says, Buffett dumps more Bank of America shares as stake nears key 10% non-reporting level. So Berkshire Hathaway, which is the holding company that Warren Buffett is famous for creating, and Warren Buffett, if you don't know, is one of the most famous investors ever, one of the richest men in the world. And Berkshire Hathaway owned over, I think it was 15% at the beginning of this, of Bank of America's outstanding shares. Once they sell off to where they hold less than 10%, they no longer have to report the sales. So the only reason we know about these is, as a public company, Berkshire Hathaway is required to report this, but we're getting to a point where they won't have to report that. At that point, we won't know for a while whether he retained 9% or sold it all. My guess is he's going to sell it all. So we'll get to that in a moment. But it says 94-year-old Warren Buffett's Berkshire Hathaway has been steadily offloading Bank of America shares over the past several months. The latest data from Bloomberg reveals that Berkshire sold millions more in recent days, bringing its stake closer to the 10% regulatory threshold, after which it will no longer have to report sales. Before Berkshire started selling Bank of America shares in mid-July, Buffett's firm held just over 1 billion shares. In just a few months, that stake has been reduced to around 814 million. Berkshire's selling of Bank of America was abrupt and without warning in mid-July. And what have we talked about in the past few videos? That if you look back at the events of early August, with the largest 2-day crash in Japanese stock market history, it appears that this financial crisis began somewhere around July 10th to 12th, in that time frame, that's when we saw a peak in the yen US dollar exchange rate, 162 to 1, and then it dumped from that point, causing this yen carry trade unraveling. We saw a lot of world markets hit highs at that point in time, so that appears to have been the peak in the beginning of this crisis. And it happens to be when Warren Buffett just started selling this off. So we'll get to it in a minute why this could be very significant. So it says, we offered some theories about possible motives behind Buffett's Bank of America dumping, including an overvalued market. Check. This is one of the most overvalued markets of all time, which I think they have a chart in a second we can look at. Recession risk, which, as the yield curve we just looked at tells us, based on the past 50 years of history, 55 years of history or so, that would be 100% risk. Consumer downturn, we definitely see that. We don't even have to read about that. We all know about that. And the possibility that a U.S. regulatory probe into money laundering could expand to major U.S. banks. I don't know if that's the case or not. Maybe it could be, but certainly the first three of these is an issue. And it says Buffett's cash pile has also soared to record levels. So this is how much cash Berkshire Hathaway is sitting on now relative to past years. So this is highly significant because it tells us Warren Buffett's going to accumulate cash when he thinks that bargains are going to become available. And for bargains to become available, well, asset prices have to crash, which means he's expecting the stock market to have a downturn, maybe many other types of markets as well, such as real estate and who knows, bond market. But it says, and it shows here this chart of what's called the Buffett indicator, which is the value of the U.S. stock market divided by the value of the U.S. economy, essentially. And as we can see here, right now, we're at levels that really have only been reached in recent history in the last couple of years. But back here, this is the dot-com bubble. So this is how overvalued things are. This is the only comparable time in history would be the fall of 1929. So probably September of 1929 be the last time you saw the market reach these levels of overvaluation. So guys, this tells us there's issues. And again, they speculate in this Zero Hedge article, well, is it an overvalued market, recession risk, consumer downturn, regulatory probe into banks? Could be all of those, or many of those, but it could also be Bank of America itself is the problem. So let's take a look at this article from justdario.com. He states, is Warren Buffett starting to be worried about Bank of America's solvency? So this is from back in July. It says Bank of America published its last quarterly financial earnings on July 16th, and from the 17th to the 19th, Buffett sold 34 million shares, cashing out $1.5 billion. Yes, Uncle Warren still holds almost 1 billion Bank of America shares. We now know that's about 800 million. So he sold 20% of that since this article. And assuming he keeps trimming his stake at this pace, it will take him about 20 trading weeks to complete the sale. It says, considering he bought the shares at an average price of $25.90, I would not be shocked to see him accelerating the sale and closing this position as soon as possible before the buffer he has evaporates. So right now, I don't know what this trades at. I think around $40 or so. So any sales above 26 and he's break even. So why would he accelerate that and close the sale? Well, despite the efforts to hide all its troubles, Bank of America conditions are deteriorating already so much from what can be observed from the outside, I cannot even imagine what the picture looks like from an insider perspective like Warren's. So we'll skip a lot of this because this is Wall Street jargon. It's not really what we would talk about on this channel. But here he talks about Bank of America is carrying, or that means acknowledging, a 20% paper loss on mortgage-backed securities. And if we apply that same recognition of loss to their real estate exposures, the grand total comes to $149 billion in losses. Now, here he points out that Bank of America's tangible common shareholders' equity is $194 billion, meaning, what, 3/4 of the bank. This bank's value is wiped out by these losses. He says, shocking, right? And there are two big things I've not even started to touch upon yet. Real estate is not even Bank of America's biggest commercial credit exposure, but asset managers, hedge funds, and private equities are. And guys, these are really shadowy organizations that there's no regulatory insight into. We've talked many times about when the next crisis hits, we'll be hearing about, well, it was this hedge fund's fault because they lied, or look at who was running a Ponzi scheme like Bernie Madoff. Well, that world is the world of asset managers, hedge funds, and private equities and private offices. That's where we don't know what exposures Bank of America is facing there, what risk lie undetected. It says Bank of America consumer lending losses are starting to pile up, with credit cards already equivalent to 7.38% losses of the total exposure that the bank carries. So they're making a credit for losses of 7.38% of their credit card loans. On top of the $700 billion of assets Bank of America has already deployed, it already committed to lending $500 billion more on top, as we saw in March 2020. This can happen on short notice if things turn ugly in the market. How can Bank of America meet these commitments without selling deep underwater assets and turning their paper losses into real losses? This is what we've been talking about for the better part of 2 years, is the U.S. banking system sitting on over $500 billion in unrealized losses, right? They're unrealized until they are. And the hope is, well, we'll outweight this and they'll never become realized losses. But if you're forced to sell, they become realized losses, which is what happened with Silicon Valley Bank a year and a half ago. Signature Bank, First Republic, the second, third, and fourth largest bank failures in U.S. history. And a crisis that at the time the media told us nothing to worry about here, but that Janet Yellen, Biden administration came out, the banking system is sound, is what they told us, right? Sound. You can put your full faith and confidence in the U.S. banking system. And then a year later, Janet Yellen comes and testifies before Congress and goes, I'll never forget those days in March 2023. We really thought we were going to see a complete run on the global banking system and it was all going to fall apart. But we got through that one, right? So they're going to lie to you when they need to. So he concludes, he says, I believe at this point, it's easy to understand why Warren Buffett started trimming his Bank of America stake. To be fair, it's arguable Bank of America is still solvent. In case you don't understand what that implies, that means basically bankrupt, unable to meet its financial obligations. Bank of America is not, your small community bank that just gets acquired and bought up or closed down by the FDIC. Bank of America is what's considered a global systemically important bank, meaning if they were to fail, then you would, with minus a big government bailout, which we could very well see, you're potentially looking at a Lehman Brothers moment, as we saw during the Great Financial Crisis, where financial institutions become leery of lending to one another and the credit markets begin to freeze up, which is what we've been pointing to is coming with this one way or another, whether it's Bank of America or someone else. So guys, this indicates we're getting near to this time, and Warren Buffett's just selling out of Bank of America. How about this? This is from the Business Standard from Thursday, so yesterday. It says China plans to add capital at big banks for the first time in a decade. It says China is planning to recapitalize its biggest commercial lenders for the first time in more than a decade. And we'll talk about exactly when was the last time, in a bid to strengthen the industry battling with record low margins, sinking profits, and rising bad debt. At a rare press conference on Tuesday, authorities flagged they will increase the core Tier 1 capital at its 6 major commercial banks, along with a slew of other measures to shore up the real estate market and the economy. It has become necessary to add capital through various internal and external channels. It would be the first time since 2008 that authorities have injected capital into one of its big banks, and the first time since they all became public companies. So guys, what happened in 2008? Well, we just talked about the failure of Lehman Brothers. The Great Financial Crisis kicked off in 2008 from a headline standpoint. The recession began the year before. But guys, this is significant. This is a big deal. China, up until this point, was taking more of a hands-off, laissez-faire approach to, we'll let the free market work itself out. And now they seem to be in panic mode, trying to fix things. What does that mean? Well, are they concerned about their domestic economy? Very, very probably so. We've talked about how they are in the grips of a deflationary spiral, similar in every way to the Great Depression, and possibly dragging the whole rest of the world into that vortex. We see Germany in it as well. I believe the whole world will be in it in due time. But they're also probably concerned about propping those banks up based on the risk from the global banking system itself, especially if they're concerned about other global systemically important banks. So this is a big deal. I don't know that this makes major headlines in the United States, but this is a really big deal what China is doing. They're coming out and essentially panicking because they see what's coming and they want to try to nip it in the bud. They want to try to prop up their own banking system. Next, we had this from the Daily Reckoning. It says, this from Adam Sharp. It says, SEC slip up hints at fresh financial fears. So this is from last Friday. It says, oops, last week the SEC accidentally published internal commentary along with a speech by Chairman Gary Gensler. Here's one of the comments which was mistakenly included. Quote, I strongly recommend that a sentence be placed here, or somewhere in the first part of the speech, to reassure markets that you're not making the speech because you think there's an imminent crisis, right? So don't tell the people what's happening. We don't want to rattle things. We don't want to upset the apple cart. They know that we're on the verge of this crisis and they don't want to spook the markets. It says these internal communications were quickly deleted from sec.gov, but not before the page was archived for posterity. The slip-up reveals anxiety among regulators over messaging. And why would they have anxiety over messaging? Well, see, if they're trying to lie to you, right, creates anxiety because they're like, we've got to remember all the past lies we've told, and we've got to craft our lies in such a way that they become believable and they aren't contradictory with previous statements we've made. So it creates a lot of anxiety when you're publicly lying to people. Whereas if you're just telling the truth, there's no anxiety there, right? So that's the reason for their anxiety. It says Mr. Gensler's speech addressed financial crises, bank restructurings, and the importance of public disclosures. In it, the SEC chair rightly argued that depositors need transparency to make good decisions, but as they told us in the past, not too much transparency. Right? So we don't want them to make the wrong decisions and go take everything out of the bank. It says if a large financial institution is restructured, the market's need for disclosure doesn't go away. Indeed, I believe the market's need for robust disclosures becomes all the more critical. First, it's the best way to ensure that investors, counterparties, and depositors will have sufficient confidence to remain with the firm. It's a solid point. Transparency does need to improve, but there's something else missing here that we need to discuss. Back in June, Daily Reckoning's Jim Rickards warned that the banking crisis may still have legs. Investors are relaxed because they believe the banking crisis is over. That's a huge mistake. History shows that major financial crises unfold in stages and have a quiet period between the initial stage and the critical stage. In the article, Rickards pointed out a key flaw with Mr. Gensler's argument that transparency should allow depositors to make wise decisions. That flaw is the speed at which currency moves in today's world. On the other hand, the crisis could reach the acute stage faster. That's because technology makes a bank run move at the speed of light. With an iPhone, you can initiate a $1 billion wire transfer from a failing bank while you're waiting in line at McDonald's. And I'm not sure that whoever has the capability of wire transferring $1 billion, I don't know that they eat at McDonald's, but I guess they could theoretically do that. It says no need to line up around, although you probably need to be a billionaire in order to afford to eat at McDonald's nowadays, or anywhere for that matter. It says no need to line up around the block in the rain waiting your turn. When a crisis hits, rational analysis is often the first casualty. In this world where money moves in a blink, if you hear about potential issues at your bank, most of us aren't going to pull up its financial filings, spend hours analyzing them, and then make a rational decision. We're going to move it to a safer bank or a mattress or into gold as soon as possible. So while it's good to hear that the SEC chair favors more transparency, it doesn't do much to allay our concerns. More disclosure could actually accelerate a crisis due to the velocity of information and money today. If a crisis hits, things can happen fast. And guys, he's right. They may favor transparency, but it won't do much to allay our concerns, and it should not, because if you've been watching this channel, you know back in November 2022, the FDIC held a meeting called the Systemic Resolution Committee. I can't remember the exact name of it. But it was basically a war game with government agencies where they sat around and they said things like, when the crisis comes, right? when everything's falling down, when we have to resolve We need the resolution of one of these failed institutions. We need to figure out who we're going to be transparent to, about what we're going to be transparent, and when we should be transparent to them, right? So that's how they think about transparency. You and I think transparency means, I'm going to tell you everything I know. That's transparent, right? That's not what they mean by transparent. They mean, well, there's a group over here, special insiders. We'll tell them everything. But, and there's the media over here. We'll tell them what to tell everybody. And then there's the general public, and we're just going to lie to them. So that's what they mean by transparency. It really means, what's our PR strategy? What's our communication strategy in the event everything's melting down? And so in that meeting, they said things like, well, the general public has a whole lot more faith in the banking system than the people in this room. You and I wouldn't do that, but we want the public. We want them to have that faith, because if they don't, everything crashes, right? So just so you have sufficient warning, as the crisis rolls out, they'll lie to you. So if Bank of America is insolvent, they'll tell us right up until the day that it fails that everything's just fine. They'll say, the banking system's sound, Bank of America's sound, everything's wonderful, no problems here. Is it? I don't know. But that's what they're going to tell you. So let's go back to this article where here he's showing a chart of these unrealized losses that we've looked at before. So again, $500 billion in unrealized losses in the U.S. banking system. This little blip back here, that's the great financial crisis, right? That's the great financial crisis. This is, we talked in a video earlier this week about a repo crisis that took place in September of 2019. And, well, lo and behold, we just happened to have a global pandemic that led to endless central bank intervention that caused this right here, right? So, yeah, everything's better. And now, now it's back to worse than ever. So who knows what awaits us on the other side of this? World War III, I don't know. Who knows what they're going to bring out in order to give them cover to try to save the system again. But it's not looking good. As this says, let's review our situation. It says the Fed is preparing for economic turbulence. So they cut rates last week, much more than many expected. Supposedly the economy is great. Stock market's close to these all-time highs. So why this cut all of a sudden? Gold is trying to tell us something as it powers to new all-time highs. Yesterday, gold was over $2,700 an ounce, all-time high. It's like 60% higher than it was just 4 years ago. Job growth for the year was recently revised sharply downward. So was GDP. GDP is also being revised downward. So come to find out, the government's coming around and telling us, the economy isn't so good. And we think, we've all been trying to tell you this for quite some time now. And now regulators are making speeches about restructuring large financial institutions. It sure feels like something is brewing. And the reason it feels like something is brewing is because something is brewing. We are in a financial crisis. I believe we're in a global depression right now. It's going to get more severe as we get to this acute phase. But clearly, if you're in China, we're in a global depression right now. If you're in Germany, you know that. Many people in the United States have have personally been in a depression for many years now. but this is going to emerge into the headlines in the very near future. And so I'm going to come back to this article on how the current global financial crisis leads to biblical tyranny. Because again, guys, I think this is a big event happening right now. I think the two biggest events from a prophetic standpoint taking place right now are Israel's conflict with Hezbollah and the collapse of the monetary system, the collapse of the financial system on a global scale. And so we put this out a month or so ago, pointed out that the Bank of Japan is trapped. No matter what they do, Japan, the fourth largest economy in the world, is going to be destroyed for all intents and purposes. It's going to be a severe impact to the Japanese economy. And guys, we're about to enter this limited bank run stage, I think, as we find out about some of these financial institutions and what their real losses are. We're going to see runs on banks. And when I put this out, I said, these steps, they aren't necessarily in succession one after another. Some, you'll see 3-4 steps happening simultaneously. And I think that's exactly what's going on right now, because we just saw China, in that article we were reading about, a massive government central bank response. That's what it is. We probably saw a prelude to that with the Federal Reserve last week. I think a bigger cut, an emergency cut from the Federal Reserve is coming before the end of the year as this crisis flares up to a greater degree. But guys, we're going to start seeing banks collapse. We may see that misstep. I don't know how soon we'll see that misstep where they'll actually follow the law. And instead of bailing out a bank, which they're likely to do with Bank of America, they'll find some, poor community bank, no politically connected individuals bank at that community bank, and it's failed. Okay, follow the law. Instead of bailing that one out, we'll follow Dodd-Frank, and it's a bail-in, which means all the depositors that have cash above the $250,000 FDIC limit are now proud owners of a failed bank. So if you have $1 million in there, well, now you've got your $250,000, which the FDIC, I believe, has up to 3 years under the law to provide to you. It doesn't have to be the same day. And your $750,000 will become bank shares in a failing bank. Maybe they're worth a few dollars, right? And so when that happens, when they actually follow the law and that happens, there's going to be a mass run on banks. They'll quickly reverse this. Oh, no, we didn't mean to do that. We're going to bail it out. Everybody gets bailed out. But it'll be too late. By then, there will be a massive run on all the mid-level banks for sure. People, businesses in particular, will be moving their cash to banks that are too big to fail, that they know will be bailed out because they're politically connected. So banks like Wells Fargo, JP Morgan in particular. And at the end of that, you'll have, 3 to 6 really large banks. And you'll have some small community banks, but those 3 to 6 large banks will probably have 90% of all the deposits in them. So they're really just going to wreck the banking system. Something big blows up, and then we have our credit crisis, a bank holiday. So guys, why are we talking about this? Because this has significance to Bible prophecy. Because this is basically a system reset. It's a crash, and it needs to be completely restarted, and the way they do that is to roll out a new system. And they've already been telling us what that system is. They want central bank digital currencies. They want tokenized assets. They want digital IDs. And they'll tell us all of the benefits that this will bring. If you just sign up to this, nothing like this will ever happen again. This will give us 21st century regulation to keep up with these 21st century bank runs, just as we read about in that previous article, that today you don't have to wait around the corner in a line that goes around the corner in the pouring rain to get into the bank and hope you get in before it closes to pull out your cash. You can stand in line at McDonald's and press a button and move everything. And so they'll claim, well, we need these types of banking regulatory tools to make sure this doesn't happen. We need to be able to find out who the next Bernie Madoff is, and this gives us insight into that. So they'll actually sell the surveillance aspects of this system as a benefit, and people will buy it. And people will especially buy it when they find it hard to pay their rent, to buy their groceries, and the government says, the central bank digital currency is waiting for you. Go claim your account. It's $10,000 there for you, or $50,000, whatever it is. People will rush and sign up in a heartbeat for that. And they'll drive us all into this cage. They'll corral us all into this cage. Shut the door at that point. Well, no more cash. New system's mandatory. No more cash. And guys, that creates a system that's indistinguishable from the mark of the beast. It's the same function as the mark of the beast. It's not the mark of the beast. That won't come until the tribulation period. But this all indicates how close we are to that tribulation period, because they'll be able to simply flip a switch and roll out the system in the middle of the tribulation, because it will already be in place. Guys, we're seeing it being built right now, right before our eyes. All they need is the right crisis, the right moment to roll it all out, to get the public to buy into it. I believe we're in the early innings of seeing that crisis play out. And at the end of all of this, we're going to have this new system that eventually will morph into the mark of the beast system. So that's why this is important. That's why we're paying attention to all of this. Guys, don't let any of this fill you with fear, make you afraid, make you worried. If you put your hope in Jesus Christ, you have nothing to worry about. Nothing at all. If you don't know Jesus, if you don't know why you should do that, this is why you should do that. We're all sinners. All that means is we've missed God's mark of perfection. God is holy. And if we've broken just one aspect of the law, if we've told a lie, then you're guilty of breaking the whole law. And that means that we're condemned. The Bible says the wages of sin is death, meaning eternal separation from God. Our destination when we pass from this world is hell. That's what we deserve. That's what justice says. And many people would say, well, a loving God wouldn't do that. You're right, a loving God won't do that. A just God does that, but a loving God laid down his life for us, because the Bible says the good news is that while we were still sinners, the Word became flesh in the form of Jesus of Nazareth. He came and he lived on this earth. He lived a perfect, sinless life. He went to the cross. He died on the cross. He shed his blood and paid the penalty for our sins, so that when God looks upon us, he sees the perfection of his Son. And then he rose again in victory over death. On the third day, he's seated at the right hand of the Father. Right now, he's preparing a place for us. And he's coming back again. So if you don't know Jesus, invite him into your life today. And you can have a peace that surpasses all understanding while the storms of this life come. Because I can tell you, based on your circumstances or where you are, you may be in the midst of a storm right now, but we're all going to be in a really big storm in the very near future economically, because of what's happening right now in the financial system. And if we see a flare up in war in any of these various theaters where we're seeing that problem, that's just going to make it all the worst. So be prepared spiritually, mentally, emotionally, Make sure you're ready for what's coming. Make sure that you're ready and prepared to share the hope that you have in Jesus Christ to a lost and dying world, to those who are in need, to those who are in fear, to those who don't know what to do in these turbulent times. So let me know what you think. Leave your comments below. Make sure to hit the like, share, and subscribe buttons. God willing, I'll see you on Monday. Bye. If you want to learn more about the end times and Bible prophecy, make sure to visit my Substack at brittgillette.substack.com. There you'll find my latest videos and articles, as well as notes, where I share the latest news headlines, the articles I'm reading, and the videos I'm watching. Subscribe for free, and each new post on Substack will be sent directly to your email. Just scroll to the bottom of the homepage and hit the subscribe button. As an added bonus, your first welcome email will include a link to a copy of my free ebook, 7 Signs of the End Times. Also, make sure to check out all of my books. Just look up Britt Gillette on Amazon, Barnes & Noble, Apple iBooks, Google Books, Kobo, or anywhere books are sold. Thanks for watching today, and until next time, keep your eyes fixed on Jesus, the author and perfecter of our faith.